Good day, everyone. This is Patrick from EasyFX Code Trading System, and it's Saturday, the 19th of August, 2023. And it's the weekly technical analysis for spot gold and dollar yen for the fourth week of August. And as we look at spot gold, it has been steadily weakening, and now it has actually closed below the swing low. Recent swing low of June, and it has dipped below to the 1890 area. So it's we have to see how far it's going to drop further before it finds some significant support. At the same time, the US dollar against Japanese yen has finally found some resistance, some interim resistance, and started to retrace, but still finding some support at the 145 round figure, which was a previous swing high and the high of the year at that time in late June. So we'll take a look to see what drove the US dollar higher through last week, and then take a look forward for this week and the upcoming news, key fundamental news for this week, which is only a couple of key ones. And compare that also with the US dollar index. So let's take a quick look at last week. Yeah, looking at last week's fundamental news, the RBA and the FOMC released their meeting minutes, with the major one coming from the Federal Reserve, with some discussion on still inflation risk and some upside on inflation, which still causing them concern, and possible more rate hikes in the future as well. Could be as soon as September, unless there's improvement in the data. And compared to that, with the UK, there's been some data that shows that the jobs has been still strong, with higher wage growth, and but unfortunately higher claims as well on the job front. So it's a mixed picture here, with higher wage growth, which could be a concern to their inflation figures. And then also retail sales figures fell lower than expected. And this is also a concern for the economy, but may temper and influence the Bank of England to hold interest rates, as it's not as strong as expected. So we'll see how this will play into their meeting next month. While for the Australian economy, the jobs is also weakening jobs picture. So that's why it's also pushing the Aussie dollar lower. But main driver last week for the US dollar was the retail sales figure, where it came out very strong, 0.7% versus a forecast of only 0.4%, and which was already fairly high expectation, but it surpassed that. So that really gave a boost to the US dollar. And this coming week, there's only a couple of major news with the flash PMIs from all the major economies. And culminating with the Friday and the weekend with the Jackson Hole Symposium, where there'll be a number of speeches from the central bankers as well. And that was where a year ago, Fed Chair Powell announced that they will still continue raising rates, and that really drove the US dollar higher then. That was a continuation of rate hikes from a year ago. Okay, so the rest of the week is still fairly quiet with no major news from the other economies. As we head into the following week, which will be the last week of the month, and preparing for this new coming month with non-farm payroll on the 1st of September. All right, so there'll be a lot of technical and chart movements for next week, and apart from the couple of news to watch out for. All right. So let's move back to the analysis. Let's begin with spot gold. Where from finding support at the daily 200 on Monday, on Tuesday with the stronger US retail sales figure, the major pairs and including spot gold dipped below to hit the 1900 round figure, and then fell further after retesting the daily 200 EMA, and fell further on the Wednesday, and then trying to find support on Thursday before closing as a doji on Friday. So sitting precariously just below the swing low here. Really needs to find some support. And if we take a look on the weekly time frame, that's no surprise with a weekly bearish close below the weekly 55 EMA, which correlates with the daily 200, and below the swing low now. And looking a bit ominous if it's going to continue over the next couple of weeks to potentially reach the 138 fib extension and perhaps the 1850 round figure. So this support zone now has got to go down to this major area of support at the 1857 to the 1850s round figure zone. That's the 138 fib extension of this swing reversal move on a shorter period. And let's mark some of this interim resistance now at the 786, just above the daily 200 EMA. And then a major resistance zone up at the 62 fib retracement at 1929. Now we could probably perhaps remove, take out this bigger fib now and replace that. Use this now. That's where we are looking at for support. And just quick look on the 4-hour time frame. Has been steadily falling lower. Okay. So let me draw another interim support at the 1875. So it's still quite a way to go to 1850. So be interim support. Okay. So we really needs to find some support and break out of this trend line and above, back above the swing low through the 1900 and back up to 1913. That will be above the daily 200. Otherwise, if it's pulling back to get rejected at 1900, then there's going to be further weakness towards the 1875, and then danger if that support breaks. All right, so we'll see how the US dollar price action plays out this week with these two major or key news. Let's compare this with the US dollar index. Here's the US dollar index, where right from the start of the week, it already attempted to test the 103, pushed up in the follow through from the previous week, test 103, pull back to find support at the 62 fib, and then did manage to break through the daily 200 EMA and this apex of this triangle, where it managed to close above the 103 and finding support at this downtrend line and holding above the 50 fib retracement. So we'll see if there's solid foundation from the 103 to continue up higher. And the next resistance zone will be at the 21 fib at the 103.66 area. So this key resistance zone, let's move it up to the 21 fib now. And let's also mark the 104 as a key resistance and a intermediate resistance up here. The 21 fib, move this up to interim support at the daily 200 and around the 50 fib retracement, and the key support is at 102 along with the rising 55 EMA and the 786 fib retracement. Let's remove this one here. Okay, and let's take a quick look on the weekly time frame. And also a bullish close as compared to the inversely correlated euro pair, which are also a bearish close for the week. So really moving in a inverse fashion. So it needs to find support and build support from the 50 fib 102.86 and continue climb up towards the 103.66 area, 65 or 66 area for the next target. And we'll see if any of these news will provide any impetus for that. All right, it is also struggling to grind its way up, just like the euro is grinding its way down slowly. All right, let's move back to the other major pairs. Let's move on to dollar against Japanese yen. Where after strong moves from the start of the week, breaking out above the intra-year high at that time from the 145 and then through the 146. And as it approached the 146.66 area at the 200 fib extension, it retraced back to find support and retest the 145 area. Which was the previous swing high. So let's see if there's going to be further retracement back down towards the next area at the 138 fib extension at 143.75, or within the zone with the 144 round figure, or whether it's able to find support and climb back to retest or test the 200 fib extension. If it does, then it could try to push through to the 147 before finally finding a stronger retracement. And of course, there's a major resistance zone above that. So the 200 fib extension is still the major resistance, and there is interim support now at the 145 at the 162 fib extension. Major support is still at 142 at this swing high with the rising 55 EMA. And another interim support at the 145 and the 138 pip extension zone. Let's take a look on the weekly time frame. And it closed with a long upper wick, almost like a shooting star, but we'll see if it's more of a consolidation where it could still continue higher, push up higher for another week before slowing down. And as it's also coming up to a danger area with potential yen weakness where BOJ intervention could come in. So watch out for these areas here. 145 was already a key one. Now it's past 146, and if it tries again to go past 146, that could be some sell-off. The BOJ wants to bolster the Japanese yen. Right, so watch out for this area now. All right, so key week this week for the US dollar, especially US dollar against Japanese yen pair. And let's see what the price action is like for the US dollar, and with respect to some of these key news coming up. All right, so do check out my other videos on the other major pairs, and have a safe week and a good trading week, and cheers for now.